Good evening and welcome to tonight's meeting of the Commonwealth Club of California. Find us on the internet at commonwealthclub.org. I'm Bruce Erickson, Managing Partner of the San Francisco office of Pillsbury Winthrop Shaw Pittman and the Commonwealth Club's quarterly chair. It is my pleasure to introduce our distinguished speaker, Richard Fisher, President and CEO of the Federal Reserve Bank of Dallas. A first-generation American, Mr. Fisher is equally fluent in Spanish and English, having grown up in Mexico. He attended the U.S. Naval Academy, graduated from Harvard, studied at Oxford, and received an MBA from Stanford. Mr. Fisher began his career at Brown Brothers Harriman and Company. He served as an assistant to the Secretary of the Treasury during the Carter administration. He then returned to Brown Brothers Harriman to found their Texas operations. He later created Fisher Capital Management and a funds management firm, Fisher Ewing Partners. From 1997 to 2001, Mr. Fisher was Deputy U.S. Trade Representative with the rank of Ambassador. He oversaw the implementation of NAFTA, negotiations for the Free Trade Area of the Americas, and various agreements with Vietnam, Korea, Japan, Chile, and Singapore. He also was a senior member of the team that negotiated the accords that allowed China and Taiwan to join the World Trade Organization. Mr. Fisher became President and CEO of the Federal Reserve Bank of Dallas in April 2005. He serves as a member of the Federal Open Market Committee, which is the Federal Reserve's principal monetary policy-making group. Just today, Mr. Fisher was quoted in the New York Times as describing Fed Chairman Bernanke thusly, quote, "I am tempted to think of him as somewhat Buddha-like. He's developed a serenity based on a growing understanding of the hardball ways the system actually works," close quote. Perhaps tonight we can ask Mr. Fisher to compare this Buddha-like person to the previous Delphic oracle. Mr. Fisher will speak to us today on inflation and debt, the interaction of fiscal and monetary policy. It is my pleasure to welcome Richard Fisher.
I want to thank you, Bruce, for that introduction. I'm honored to be here this evening. I'm grateful for the invitation to speak to the Commonwealth Club of California. This club was born the same year as my father, 1903. And through the great transformational brilliance, I think, of this country, it's amazing to me, the child of someone, by the way, who was homeless and begged for food until he was 20 on the streets of Queensland, Australia, to speak to such a distinguished group. And I want to thank you for having me here this evening. Alan Greenspan and Paul Volcker, two of Chairman Ben Bernanke's linear ancestors as chairman of the Federal Reserve, have been in the news quite a bit lately. Yet we rarely hear about William McChesney Martin, who was a magnificent public servant who was Fed chairman during 5 presidencies and to this day holds the record for the longest tenure, some 19 years. Chairman Martin had a way with words, and he had a twinkle in his eye. It was Bill Martin, as he was referred to, who wisely and succinctly defined the Federal Reserve as having the unenviable task of taking away the punch bowl just as the party gets going. He did himself one up when he received the Alfalfa Club's nomination for the presidency of the United States. And I know that your executive director, Gloria Duffy, and others have been to the annual Alfalfa dinner. It is one of the great institutions in Washington, D.C. Once a year it holds a dinner solely to poke fun at the political pretensions of the day. You can imagine how much they have to poke fun at. And with tongue firmly in cheek, the club nominates a candidate to run for the presidency on the Alfalfa ticket. Of course, none of them ever win. Nominees are thenceforth known forevermore as members of the Harold Stassen Society. And for those of you who are young here, it's named for Harold Stassen, who ran for the presidency of the United States 9 times, and then ran a 10th time on the Alfalfa ticket and lost once again. And the motto of the group is Vini, Vidi, Vici. I came, I saw, I lost. Well, Bill Martin was nominated to run and lose on the Alfalfa Party ticket in 1966 while serving as Fed chairman during Lyndon Johnson's presidency. And in his acceptance speech, he announced that given his proclivities as a central banker, he would take his cues from the German philosopher Goethe, who said that people could endure anything except for continued prosperity. And therefore, Martin declared he would adopt a platform as president that he planned to make, quote, life endurable again by stamping out prosperity. I shall conduct the administration of the country, he said, exactly as I have so successfully conducted the affairs of the Federal Reserve. And to that end, I shall assemble the best brains that can be found, ask their advice on all matters, and completely confound them by following all of their conflicting counsel. Well, Bruce said in his introduction various things about me. It is true I am one of the 17 people who participates in the Federal Open Market Committee deliberations, and I do provide Ben Bernanke with conflicting counsel as the committee cobbles together a monetary policy that seeks to promote America's economic prosperity. By the way, Goethe to the contrary. But tonight I speak neither for the committee, nor for the chairman, nor for any of the good people that serve the Federal Reserve System in the United States. I speak solely in my own capacity. And I want to speak to you tonight about an economic problem that we must soon confront, or else risk losing our prosperity and primacy as the world's most powerful and dynamic economic machine. 43 years ago this Sunday, Bill Martin, the former chairman of the Federal Reserve, delivered a commencement address to Columbia University that was far more sober than his Alfalfa Club speech. The opening line of that Columbia's University address were as follows, quote, "When economic prospects are at their brightest, the dangers of complacency and recklessness are greatest. As our prosperity proceeds on a record-breaking path, it behooves every one of us," he said, "to scan the horizon of our national and international economy for danger signals so as to be ready for any storm," end of quote. Today, our fellow citizens and financial markets are paying the price for falling victim to complacency and recklessness, as Martin warned against. Few scanned the horizon for trouble brewing as we proceeded along a path of unparalleled prosperity, fueled by an unsustained housing bubble and unbridled credit markets. Armchair or Monday morning quarterbacks will long debate whether the Federal Reserve could have, should have, would have taken away the punch bowl that lubricated that blowout party. I've given my opinion on that matter elsewhere. I won't go anywhere near it this evening, by the way. What counts now is what we have done more recently and where we go from here. And whatever the sins of omission or commission committed by our predecessors, the Federal Open Market Committee under Chairman Bernanke's leadership is going forward to use a new set of tools to calm the tempest in the credit markets to get them back to functioning in a more orderly fashion. And we trust that the various term credit facilities that we have recently introduced are hopefully restoring confidence while the credit markets undertake self-corrective initiatives and lawmakers consider new regulatory regimes. I'm also not going to discuss tonight present monetary policy, except for to say that if inflationary developments, and even more importantly, inflationary expectations, continue to worsen, then I would expect a change of course in monetary policy to occur sooner rather than later, even in the face of an anemic economic scenario. Inflation is the most insidious enemy of capitalism and